Okay, hello, hello. Here we are again with another episode of Milkshakes, Markets, and Madness. This is a show where we talk about the financial markets, we talk about the madness surrounding those financial markets, and we do it through the lens of the dollar milkshake theory, which is a framework for understanding how the monetary system is designed, how it operates, and how it might react in a crisis. In any case, the reason that we also include madness is because there is so much madness going on right now. It's hard to even keep track of it. And the funny thing is it's almost the madness is so ridiculous that it's becoming normalized. And I think that in itself is very apropos of the times. And just a couple examples from the last week, because in many ways, so much has happened in the last couple weeks, but in other ways, we're still kind of in the same place that we've been for the last 3 or 4 months. And what I mean by that is we still have so much uncertainty surrounding politics, so much uncertainty surrounding geopolitics. We have so much uncertainty surrounding the markets. But the uncertainty is leading to a level of ridiculousness, and people are used to it. They're no longer surprised by the ridiculousness. And I'll just give you a couple of examples. In one case this week, the last cabinet meeting for the Biden administration was not even chaired by Joe Biden. It was chaired by his wife. Now, since when was Jill Biden elected president? Now, you could argue that it's only a couple more months and it's not that big a deal. And, we know that Biden has had a little bit of a cognitive decline. And so it's not totally out of the realm of possibility for, Jill Biden to step up and chair the cabinet meeting. But on the other hand, it indicates we don't have an operating president. And it hasn't even really been covered all that much in the news. I mean, I think in any other time and in any other administration, this would be all over the front page news, but it's not. In any case, the other thing that I thought is equally, it's just crazy, is it was only a couple of weeks ago where Trump was potentially going to be shot again. And the fact that we have to say again, and it was only a couple of weeks ago, which was only a couple of months from the first time. I saw a great tweet from somebody who said, I was talking to somebody about the potential Trump assassination the other day. And the fact that I had to delineate between which potential assassin I was talking about is just apropos for this. And again, it is so 2024. I mean, you just have to laugh at this stuff, because if you don't laugh at it, you cry, right? And then the other thing that's just kind of maddening going on is the Fed cutting rates at basically all-time highs, right? You've got gold at its all-time high. You've got the Dow at its all-time high. You've got the S&P at its all-time high. You've got the NASDAQ a couple percent away from its all-time high. And then not only did they cut rates, it was pretty clear they were going to cut rates. But not only did they cut rates, they cut 50 basis points. Now, I had actually thought there might be a lot more volatility in September. So the 50 basis points didn't actually surprise me, because I thought there'd be a lot more volatility, and I thought they would perhaps kind of want to front load the cuts. And that's essentially what they've done. But the fact that they did it and the way they explained it, I just thought was, again, just hilarious, because on the one hand, the reason that they are cutting and the reason that they're cutting 50 pips is things aren't fantastic under the scenes, right? Now, that doesn't mean that we're going to have the Great Depression next week, but it just signals that things are not fantastic under the scenes. Otherwise, they wouldn't be cutting. But then to come out and say everything's great, but we're cutting 50 bips, I mean, that's a pretty hard needle to thread. And so the markets sold off initially, but not hard, sold off Wednesday into the close. And then I think listen, it was a very, very dovish meeting. I mean, they talked about cutting 50 now and potentially cutting 50 more. And, but then, Powell was also, it's still going to be data dependent. So there's still some uncertainty out there. But Thursday morning, the markets opened just up gangbusters. I think the S&P was up close to 2% at one point. The NASDAQ was up close to 3% at one point. And then it kind of pulled back into the close. I think they ended up the S&P was up 1 and NASDAQ was up 2. And then they sold off a little bit Friday morning, bounced a little bit, but we kind of ended the week kind of where we started the week. And now we've got to wait to see what comes next. And we've got a presidential elections in 6 weeks from now. We've got a couple more inflation reports that will have to be taken into account before the next Fed meeting. So in any case, it's a pretty maddening world. And like I said, if you don't laugh about this stuff, you're going to cry. So, but what I thought I would do this week here, let me just kind of pull some of this stuff up here. I kind of already talked about this a little bit. Gold had another great week, ended above 2,600, 2,620. As we discussed, the Fed cut. Silver had a good week, closed above 31. Oil had a little bit of a better week. It closed above 70. Previously had been trading in kind of the mid to high 60s. VIX came all the way down to 16 again. But as we mentioned, equities are back near their all-time highs. And so now we've got to digest kind of what comes next. The other thing that I thought we would talk about is, I just thought I'd show you here these equities here just at their all-time highs. But really before I get into that, what I really wanted to do was talk about the milkshake a little bit, because we always refer to it and we always kind of bring it up in passing, but we never really focus on it. But one of the things I wanted to say about the milkshake, especially now, and especially because the dollar has pulled back. Many people thought the dollar was going to fall dramatically over the last, especially over the last couple of days. They were expecting, Powell to be very dovish, and they thought the dollar would sell off hard on that, and it didn't really. It kind of held pretty well. It's sitting right at 100. The Bank of Japan did not raise rates. And so a lot of people thought that the Fed was going to cut aggressively. The Bank of Japan was going to raise, and therefore that would send the dollar down. And neither one of those things happened. So I thought it was a good, but because in general now people are expecting the Fed to be easing, that is in general not good for the currency. When interest rates are being cut, that's generally not a positive time, all else equal, for the currency. But what's also going on now is gold is at its all-time high. And so everyone is saying, see, the milkshake is wrong. But and they're saying that gold is now going to replace the US Treasury as the global reserve asset. And here's the thing is that could happen. In fact, that's potentially a result of an overall global sovereign debt crisis. And if you understand what the milkshake theory is how does the world markets react in a global sovereign debt crisis? So is it possible that markets in general start saving their reserves in gold on a higher percentage than they have been in the past, and as such demand for treasuries fall compared to what it used to be? And the first thing I'd say is, of course, that's possible. Of course. And that was discussed in the very first time I ever spoke about the milkshake theory, which goes all the way back to 2018. But essentially, think about this. If treasuries are in less demand and nobody wants to buy them, then that would mean the yield would rise. Well, when yields rise, that pulls the currency higher. We saw that very clearly in 2022. So as the currency, as the treasury prices fall, then the dollar rises. As the dollar rises, that puts incredible pressure on the rest of the world. As the rest of the world has that incredible pressure on them and their economies start to suffer, then they have to do QE, or they have to do extraordinary monetary policy measures. But again, that's exactly what we saw in 2022. And so what happens then is you get into a thing where there's a flight to safety, but both dollars and gold are targets for the flight to safety. And that is how you get dollars and gold rising together. So the reason I bring this up now is because when people will show me the gold price to indicate that my thesis is wrong, they don't understand that gold doing well and gold being the ultimate winner has always been part of the milkshake. This is not something new. It's always been there, and all you have to do is go back to the very first time I ever spoke about it, and many interviews since, and we'll do that in a second. But the reason I think it's funny now is I'm getting tons of people in my DMs, in my emails, just out on regular Twitter saying, the gold is now proving you wrong. Well, it's not proving me wrong. And I've got there's this one guy up in I don't know if he's in Canada, or I think he's in Canada, but literally 2 or 3 times a week, he sends me an email about, or I'm sorry, on Twitter, messages about gold proving me wrong. And here's the thing. It doesn't prove me wrong, but it's hilarious and he thinks that's all anybody should own. He doesn't think anybody should own anything other than gold. And he can't literally have a conversation about anything other than gold. But here's the thing. If you're a tire manufacturer in the Philippines, you can't hold all your reserves in gold. If you are a car manufacturer in Korea, gold doesn't necessarily help you. You still have to operate in the real world. Now, if you are an individual investor and you have a lot of money and you can just buy a bunch of gold and just sit on it, and you have a secondary source of liquidity to meet any bills, and if gold has $100 or $200 pullback, that doesn't affect you, then sure, perhaps you can do that and you'll end up fine. But gold does not solve all the world's problems. And the fact that you can't even have a conversation about anything other than gold with some of these people, on the one hand, is a source of frustration, but on the other hand, it's a source of entertainment because it literally just never ends. But I've interacted with a bunch of people recently, and even I have to say I've gotten so many nice messages from many of you, and I've gotten emails, and I've gotten DMs, and I've gotten comments posted, under the YouTube. And listen, I so much appreciate it. I'm not always able to respond to everybody, but if you're listening, I want you to know that I do appreciate it. I'm glad that you're still tuning in. And listen. I'm glad you ask questions, and I'm glad you challenge me sometimes. That's the only way to learn. And so I keep hoping somebody will prove me wrong on this thesis, because I don't specifically love the idea of the dollar going higher. In fact, my world will be much better if I am wrong. So if somebody can prove me wrong, I'm open to that. But so far, all the arguments I've received are the same ones I received in 2019 and the same ones that I received in 2021. But in any case, it's not only the haters that I get messages from. Even the people that claim to be fans are giving me a hard time. Like Jimmy Olsen. Jimmy Olsen tunes in every week, always leaves nice comments. And then out of the blue last week, he decides to start playing for the other team. Now, Jimmy, if you're out there, I know we've had a long road together, but you're on the hot seat now, buddy. So, take it easy, relax a little bit, go back, study your notes, and, perhaps we'll let you back in the good graces at some point. But, there's other people out there that are great. William, who was always commenting, is fantastic. And Tim from Chicago is always commenting. So in any case, Jimmy, I'm just kidding. I'm glad you tune in, and I appreciate the back and forth. But you're still wrong. Anyway, what else that I thought I would do this week is, because we're talking about this and because people still keep trying to use gold as proof that the thesis is wrong, I thought I'd go back to the very first time I ever even spoke about this publicly. The first time I ever uttered the word milkshake with regard to anything finance related was early in 2018. And at that time, gold was priced at 1330 and the dollar index was around 89. And over the next couple of months, I kind of developed the thesis a little bit more. And then in early summer, late spring, early summer, I gave my first interview where I spoke about this publicly. And that's when I released the whole dollars and gold rising together. And I very specifically said in that very first interview, I know this sounds a little confusing, but it's not. And the reason it's not is because when I'm talking about gold and dollars rising together, It is in relation to other currencies. I never said that the dollar was guaranteed to have its purchasing power rise. The strong dollar is in relation to all of its competitors, which is all the other foreign currencies. But I said you can get into a situation where dollars and gold rise together. Now, this upset many people, especially people in the gold world, but I'm not sure why. And I think part of it is that their thesis has always been that the dollar is going to get inflated away and therefore the gold will rise. And anything that kind of goes counter to that, they don't like. But the reality is all fiat is the same. And you're going to listen, you've heard me say this a million times, but I'm going to say it again because it's really important to understand. In a situation where dollars and gold are both rising versus all other fiat currencies, regardless of what it's doing against corn or wheat or soybeans or goods and services, dollars and gold rising together causes havoc in global capital markets. And gold, if you own gold, it is going to help you, but it does not solve all your problems. But the reason it's important to understand this is because as the dollar rises versus other currencies, it causes havoc in the global capital markets. All you have to do is go back and look at a 25, 30 year, 40-year chart. Every time we've had any kind of global slowdown or crisis or volatility, it is 100% correlation with a rising dollar. That's just the way it is. So the idea that you can ignore the dollar and you're going to be totally fine just because you own some gold, history says that that's incorrect. And the other thing that I said back then was, listen, we don't have to have a situation where the whole world goes out and just starts putting all of their money into gold. You just need a little bit going into gold, and it can make a big difference. And one of the things I specifically said was you don't even necessarily need Americans to go buy it, because as this happens, the dollar will hold up, but other currencies will fall. And as those other currencies falls, those other countries are going to be in demand for gold more than the US. And that's really exactly what we've seen over the last couple of years. Huge demand out of Asia, much more so than in the US. And as they are trying to get out of their fiat currencies, which are even worse than the dollar, and they're buying gold, that has pushed the gold price up dramatically. The other thing that I wanted to point out was, for anybody who missed last week's episode, we put out a report on the Macro Alchemist channel about carry trades. And this very specifically shows why differences in fiat currencies matter. So even if you own gold, and even if you think that's the ultimate winner, which I agree with you, if you have a business that operates on the global stage, if you have personal interests, real estate, investments, exposure, whatever it is that has exposure to things other than the dollar, or actually even exposure to the dollar, this matters. And so this report that we put out, again, if you just go to macroalchemist.com, you can get it. It gives you a number of examples of why fiat versus fiat matters. But going back to dollars and gold, so 2018 is when the whole milkshake thing first started. And like I said, at the time, what I did is I made this chart. It's just referenced to $100, and it shows the appreciation since then. So since the very first time I ever mentioned it, gold has gone up 194%, or no, it's almost doubled. Not 100, it's gone up 94%, and the dollar has gone up 13%. And you can see on this chart, you can see the inverse correlation between the dollar and gold. And that's what people focus on. They'll say, no, it trades opposite. And yes, it does. Over very short periods of times, it typically trades opposite, which makes sense. They both can't rise together against each other. But if you stretch out and you zoom out, everybody always tells me to zoom out whenever I'm doing my analysis. Zoom out and you'll see the big picture. Well, if you zoom out over the last 5-6 years, the dollar has risen at the same time that gold has risen. Then people will say, yeah, but the dollar's only up 13%. That's nothing. Okay. At one point, it was up 25%. Now it's up 13%. But anywhere from a 10, 20, 30% move in a currency, that is a huge move. Currencies are not supposed to move 2 or 3 or 400%. So the fact that the dollar, despite everything, all the money that's been printed, all the helicopter money, all the bailouts, all the stimulus, despite all that happening, the dollar has still risen versus its peers, double digits. At the same time, over that same period that gold rose, it's pretty obvious that if you zoom out, that is the case. Now, the other thing that I wanted to show is a lot of times people will say, in 2014, the rest of the world stopped buying US Treasuries. Well, that also coincided with the dollar. So the black line is the dollar here. The pink line is gold. The blue circle is basically the bottom of the dollar in 2014. So it just so happens that when it's always mentioned that the rest of the world stopped buying treasuries and started putting their savings into gold, the dollar rose. Pretty interesting, right? And then if the gold had its bottom about a year later, late 2015, right? But since then, again, gold and dollars have risen together. Now, if you look at this, what I did is I moved the gold's bottom of 2015 back to equate to the low of the dollar. And my point is that gold kind of has, if you look at this, the correlation is not perfect, but it's kind of there. You can kind of see gold and the dollar moving together and higher. Now, it's not perfect, but my point is that gold kind of reacts to the dollar. And if you lag it about a year, there is a correlation here. The other thing that I would say is that I never said that the dollar would go up as much as gold. That would be crazy. When I first started talking about this, the dollar index was around 89 and gold was around 1330. The target price for gold was 150. I'm sorry, the target price for the DXY was 150 and the target price for gold was 5,000. So if all of my target prices were met, that would mean that the dollar index rose 66% and the gold rose 375%. So the idea that I expected the dollar to go up the same amount as gold is crazy. So then if you fast forward to where we are now, the DXY has gone up 12%, gold's gone up 97%. And I'm sorry, these charts look a little off. I'm not sure what happened when I uploaded this. But the DXY is 18% towards the target that I gave, and gold is 26% towards the target that I gave. If we would have looked at it a couple of years ago, when dollar was at its high, the DXY was 39% towards its target, and gold was only 6% towards its target. And that's kind of what I expect. I expect in the years ahead, things don't go in a straight line. The only place that things go in a straight line is in fairy tale land. Markets move, they go up, they pull back, they go up, they pull back. I expect that to continue. I expect there to be times when gold is outperforming the dollar. I expect there'll be a few times when the dollar outperforms gold. But I think over time, you're going to continue to see dollar and gold rise. Now, let's talk about gold a little bit. Gold is at its all-time high. And you remember a couple of weeks ago, we were talking about the signals that I look at to see whether something is oversold or underbought or overbought, and whether it's a good buying opportunity or selling opportunity. This is an example of, I'm just showing you the price of gold. It's all time, and the middle chart is the relative strength. Now it's at 70, which is not totally extreme, but it's getting pretty high again. The stochastics are at 93. You can't get any higher than 100. So it's pretty high. So basically what this is saying is gold is basically overbought at these levels. Now this is the sentiment index. This shows gold at 84. So it's not totally extreme. It kind of has to get above 90 to be totally extreme. But again, we're getting pretty close. And then this is the whopper. This is the commercial position, short position versus gold. And you can see kind of typically the inverse relationship, not always, but typically when the shorts the pink is the commercial shorts, the black is gold. And you can see that right now the commercial shorts have their second biggest short position ever, almost back to the all-time high of back in early 2020. And the thing is these reports are 4 days 4 days late. And so this doesn't include the big move up in gold over the last 3 or 4 days. So real time, we're probably back to the biggest all-time short position that we've ever had. And if you split this up and you just look at the speculators, because some of this is gold producers who are hedging their production. But if you split it out and just look at the speculators, The swap dealers. I'm sorry, the swap dealers are taking the opposite side of the speculators. They have their biggest ever short position. This typically does not end well. And so when you have gold very high on the sentiment, at its all-time high, very high on the relative strength, and you have the commercials have their biggest all-time short, that is the sign for a pullback in gold. Now, I'm not saying this because I think gold is going to crash to $1,000. I'm not saying this because I want you all to run out and sell your gold. Again, I think gold's going to do very well in the years ahead. But anybody who bought it in the last week and bought it on leverage needs to be very careful. If you look at, I even sent this out, and this is why this is important. All of those shorts, there's 330,000 contracts that are short. That equates to about $3 billion worth of margin that has been posted. And if you tally up the value of all those contracts, it's about 80 billion. So it's a huge, huge short position. And this is bought on leverage. And so if the price starts to go against these shorts, or starts to go with the shorts and against the speculators, this can change very quickly. The thing is this chart represents guaranteed buyers. It's just a matter of whether these shorts are going to cover at the highs or if they're going to cover at a much lower price. Now, if they have to cover here, then you're going to see a gold at 3,000, 3,500, some kind of a crazy number higher. But that is not typically what has happened. Typically, that gets resolved with the commercials making out better off than the speculators. So just one way or the other, there's going to be blood in the gold world. Whether it comes from the speculators or whether it comes from the commercials, I don't know yet. But I can tell you, if gold goes any higher in the very short term, I will be buying some hedges. Can't tell you what to do personally. If you can hold on, I think everybody should absolutely hold gold. Again, I'm not telling you this because I want you to run out and sell all your gold. I'm telling you this because the situation, the environment that we're in right now, typically has not worked out well over the short term for those who have put on new positions. So anyway, with all that in mind, be careful out there. There's going to be blood in the gold world one way or the other. Again, which side? It's going to be really interesting to see. But, historically, this has not worked out well for the speculators. So anyway, that's all for this week. Hope you guys have a great weekend. Hope you have a great week ahead. And we'll be back next week to discuss more. See ya.